Alright guys, welcome to the section on identifying trend direction. In this section, we're going to talk about how to identify when trends are changing, when the trends are moving from up to down and down to up. So in this section, we're going to focus on the monthly and weekly trends. Later on in the course, we'll talk about other time frames, and you'll begin to understand when we are swing trading, we want to analyze the monthly and weekly trends. When we want to focus on day trading or intraday trading strategies, we'll take a look at the daily and 4-hour trends. Okay, so in this video, we're looking at a monthly chart of the Canadian dollar futures, 6C. So if you recall in the previous lecture, the market cycles video, we have 4 key cycles that we want to pay attention to. Right here, we have the downtrend where the sellers are stepping in and pushing the price down. Next, we have buyers stepping in who are soaking up all of this extreme selling pressure that we see right here, and we are now accumulating. The buyers and the smart money are accumulating this market, the Canadian dollar, at these price levels. And they're looking to get long and get into this market to then push prices higher. So we have the drop, we accumulate, push price higher. Next, the smart money begins to step in at key levels. The sellers are stepping in, soaking up the buying pressure, and we begin the period of distribution. This sideways action here, period of distribution before we finally break and the sellers are able to push the market lower. So we have accumulation here, followed by uptrend, distribution, followed by downtrend. So we won't always see these key turning points. Sometimes the market will reverse sharply where we don't have that sideways or consolidation price action, accumulation or distribution, but we typically can see that when we drill down to the lower time frames. So now we want to identify the trends. So if we look at this chart on the Canadian dollar, we are not really in a trend market right now. If you can see that we are more in a accumulation stage. However, the market does appear to be trending to the upside. Why? Because we had a very clear or steep downtrend here, which we then broke, and the market began to consolidate or begin its accumulation phase. This market is short-term in an uptrend. As you can see, we've got consecutive months notching higher. However, we really need to take out this range or this short-term resistance to be in a confirmed uptrend market. But if we do drill down to the lower time frame, you can see that we are indeed in an uptrend based on the shorter time frame, which is still the weekly chart. So here we have our sharp downtrend move followed by our period of consolidation or accumulation, and the market is now moving higher, giving us a short uptrend confirmation. We might be able to see this a little bit better by flipping back to the monthly chart and looking at another example. Now we have a clear downtrend right here, followed by a period of accumulation. So we are now in the accumulation stage. Once we break these swing highs here, we are now in a confirmed uptrend. You'll notice that the market pulls back to retest that accumulation stage area, and the uptrend resumes. And on the flip side here, we are in an uptrend. The sellers are coming in. We have a period of distribution. We start to take out these swing lows here, come back to retest, and then we resume the downtrend. And so in the next videos, we're going to be talking about identifying these key trading zones and how they are often well respected.